Hello everyone, welcome back to my YouTube channel Sachin Education Hub. Friends, today we are here to discuss the differentiate between two most important concepts. That means one is Indian AS and the another one is US GAAP. And as the name suggested, Indian AS, which means that accounting standards which are applicable only in India, or you can say that applicable only for the Indian companies, right? And similarly, on the other side, US GAAP, as the name suggested, United States, that means journal accepted accounting principles only applicable in USA, that is America. So, in short, the accounting standards which are applicable only in India and only for the Indian companies are called Indian AS, and those accounting standards which are only applicable for the USA, that means American companies, then these accounting standards are considered to be US GAAP. Is it okay? So similarly like that, the another differentiate between these two things is scope. The next differentiate between these two terms is scope. If we talk about the scope of the Indian AS, then it is mandatory for the classes of company. Different classes of company in India, but specially listed companies. Specially listed companies. And what are the listed companies? Listed companies are those companies which are listed on the stock exchanges of the India. Especially there are two stock exchanges familiar in India, that is NSE and BSE right now. And if the companies are listed their shares in that stock exchange, then these companies are considered to be listed companies. And if the company is a large company or the listed company, then it is mandatory for that company to follow the Indian AS. But on the other side, if we talk about the US GAAP, then it is also mandatory for the US companies. But it is mandatory for every type of company, not only one type of company. You can say that if there is any type of entity like public, private, then both or any other type of entity have to be follow the US GAAPs. That means that a type of accounting standards in preparing their accounting. Right? Next differentiate between these two terms is on the basis of financial instrument. Actually, if we talk about the Indian AS, then there is a no complex methods here, there is a no detailed type of rules here for the purpose of classification and measurement of the financial instruments. But on the other side, the US GAAP is more complex. It means the accounting standards that are prepared, that are available in US, or you can say that US GAAPs makes the classification and measurement of the financial instruments very complex, very time consuming and very lengthy process. So that is the reason you can say that Indian AS is less complex than the US GAAP in terms of financial instrument. Next one is goodwill impairment. As you know, goodwill impairment, first is impairment. What do you mean by impairment? Impairment, you can say that in simple term, deteriorations of the asset, or when the asset give you the negative value, you have to be tested. And according to the Indian accounting standards, you have to test your asset that when it give you the negative value, right? You have to test the goodwill one time with a one time test, or you can say that according to the Indian accounting standard, you have to only do one time impairment test to checking the impairment of the assets. But on the other side, if we want to know the impairment, or you want to do the impairment test, then there is a two-step verification for this purpose, or you should say that there is a two steps for doing the impairment test as per the US GAAP, but only one step is followed according to the Indian AS. There is a differentiate between according to the goodwill impairment in these two terms as well. On the other side, next is consolidated financial statement. It is not mandatory to follow the consolidation financial statements provisions according to the Indian AS. You just have to compile with the schedule 3, or you can say that schedule 3 of the balance sheet of the financial statements that are that is required to be prepared by the companies as per the rule of the companies rule 2014. Schedule 3, right? Schedule 3 balance sheet, as you know very well. So you have to be just compiled with if you not follow the consolidated financial statement. But if you want to present your consolidated financial statement, then you have to be follow the accounting standard 21 as per the Indian accounting standards. But on the other side, it is a 100% mandatory for the companies of the USA to follow the consolidated financial statement provisions if the company have same common control with any type of subsidiary. So you can say that if there is a company with the same control, then you have to be follow, or you can say that you have to be mandatory follow the consolidated financial statement provisions as per the US GAAP in America or in USA. Otherwise, in India, as per the Indian accounting standard, there is no mandatory provision regarding that. But if you want to present your consolidated financial statement, then it should be followed. Then it should be followed. Next one is inventory valuation. As per the inventory valuation, there are three methods, namely FIFO, LIFO, and weighted average. You have to evaluate your inventory as per the Indian AS according to the three methods, that is first in first out, last in first out, and weighted average. But there are only two methods in the US GAAP. One is FIFO, another one is weighted average. There is no concept of any LIFO. You can say that last in first out. So according to the US GAAP, if you are prepare your accounts according to the US GAAP, you don't have to be follow LIFO method in your inventory valuation. But on the other side, according to the Indian AS, it's your choice at what basis, at what method you want to disclose your account, or you want to evaluate your inventories, right? As the case may be FIFO, LIFO, or weighted average. Now the next one is intangible asset. According to the terms of intangible asset, there is a differentiate between these two terms as well. And if we talk about the Indian AS, then the amortization generally over their useful life. But according to the US GAAP, amortization or impairment based on the specific rule. So simple terms are here. If we talk about the Indian accounting standards, then after the useful life, impairment is done. Or you can say that amortization purpose should be done. But on the other side, if we talk about the US GAAP, then amortization should be done according to the specific rule, no doubt its useful life is ended or not. Okay. Now the last point is tax accounting. If we talk about the tax accounting, then as per the Indian AS, you should have to be know how the tax should be recorded in the books of account. So there are different types of basis to record the taxes in your books, or you can say that how to account the taxes in your books. There are different types of basis for that thing in according to the Indian accounting standards. Indian accounting standards provide you the different types of basis how you record your taxes in your books. But there is only one type of base in the US GAAP, that means principle of the deferred tax. You just have to follow the principles of the deferred tax to record the taxes in your books as per the US GAAP. But there are different types of basis that is used by the companies according to the Indian accounting standard to account for the taxes in their books. So this is the differentiate between these two terms on the basis of many things. That means you can say that inventory, consolidated financial statement, tax accounting, intangible assets, goodwill impairment, meaning these are some types of basis which gives you the differentiate between these two terms as well.